live streaming today. My computer, I bought the other one. I set everything up on it, and it might work. It's strange. Didn't have to work on it or do anything to it. Okay, in taxes, folks, we only have 3 tests. Now, I'm going to consider, you all passed all those tests for VITA. I like to get 4 tests, but we won't be able to get 4 tests. Your exam's going to be on chapter 2, 3, and whatever sub S is. We'll look at sub S a minute today. We'll get back and compare the two. But anyhow, hope you all out there live streaming, or you will look at this videotape and so forth. But today we're going to turn straight to the sub S chapter. Now we've got a problem back on corporations to do. We've got to fill in those Helm schedules back on corporations. And we've got some homework problems, even problems to look at. Today, we must look at sub S. Now, today is, what is today's date, Olivia? 24th, isn't it? All right. And what will next Thursday be? A week from today. Do what? Will be May 1st? May 3rd. So we've got this week and we got next week. And what happens? When do exams start? On the 7th?
Yeah, the 7th is that Monday.
All right, so we've got 2 weeks of classes, is my point. All right, let's turn to page 11-2 and 3. 11-2 and 3. You have a book, Olivia. Okay. All right, on page 11-2 and 3, a sub S corporation. Now, I would like for you to bring in the tax return for sub S on Thursday. You'll bring in 1120S. And all of you out there that hear me, bring 1120S, please, to class. The advantages of an S corporation. Well, we know a proprietorship, and it's taxed on the individual. You had partnerships, advanced accounting probably, or will have, and you had it in a little bit in Princeton. You had just a little bit of corporation and taxes, and we'll have a little bit of sub S. A sub S is a corporation. You get all the benefits, but you're taxed individually like a partnership. So look at page 11-3. The corporation's losses pass through to the shareholders. A corporation would not. The corporation's income is exempt from corporate income tax. And then undistributed income taxed to the shareholder is not taxed again. Capital gains, dividends, and tax-exempt income are sent on to the owner. Deductions, losses, and tax credits are separately stated and retain their deduction when passed through to the owner. By disadvantage of an S corporation, C corporation is treated as a separate entity, thereby permitting its first $50,000 of income to be taxed at only 15%. This corporation earnings are taxed to the shareholder even if you don't take it out. Dividends received by the S corporation are not eligible for the dividend deduction. Allocation of ordinary income or loss and the separate stated items is based on the stock owned by each person. The loss limitation for S corporation is similar for a partner in a partnership because the treatment of liabilities. Shareholders can increase their loss limitation by the basis of any debt they loan to the S corporation. All right, basically, I like an S corporation because it don't pay corporate taxes. I like an S corporation because everything is treated this year the same as an individual. So an S corporation does not pay corporate taxes. That's the big item. Now, I wanted to look at, don't know if I have the return here or not. I want you all find the tax returns in the back of your book. Find a tax return for S corporation. I know we have it there somewhere. Should be. They just have a list of forms. There's 1120. I'm looking for, okay, I found it. Page B-67. All right. Now, I'm going to try to, by next Thursday, to have you all in corporations and sub-S corporations, and I'll give you a take-home problem. You'll work it both ways, as a corporation and as a sub-S. And that will be part of your exam. And then the rest of your exam will be on the 3 chapters. All right? Or either one of you all an expert in cheating. In cheating, I gave an accounting principles test. 50 multiple choice. Brand new test. I made it on my computer. Test generator though. I did leave it on my computer. Day before the test, Michelle ran it off, and I gave the test. And while I had the test in my office, I kept my office locked, and I had it buried and hid under a bunch of paper. So, okay, I give a test. My accounting majors, third grade was 30 and 40. I enjoyed it. Anyway, third grade was 30 and 40. All right, my non-accounting majors, all right, I had 2 young people in there, never been to class, never gave me a summary. I don't know if they have a book or not. All right, I gave them patient ratios, they could bring them. They didn't bring the ratios, we copied before. They didn't bring a calculator. I had to find them a pencil. And they make the best grade on the test. How do you figure that? How could they have gotten hold of my test, Robert? What? All right, if they did, even if I leave my computer turned on, it wants me to enter my password every 2 or 3 minutes. They have to know my password then.
Have them do the same test again.
What?
Have them do the same test again with different numbers.
Or same test again, just rotate. Well, I think they had it memorized. They must have read it. They had to have my answer key too. Because these guys could not take this test home in a week and work the problem. They had to have my key in the book. And it was on the computer, of course. The test generates a key. It's a mystery, but I'll try to solve it. I was just telling Mr. Ryan, I went to school with a guy. He spent all of his spare time trying to cheat. And I think I told you all this story in Princeton. All right, this guy, fraternities collected test banks then. And now, if you had like a economics class and the instructor gave 5 discussion questions, you probably could go to a fraternity and pay them $20 and get 2 copies of his old test. And most likely, if you knew those 2 old tests, you would hit his test and know all the questions he asked. So this guy did that. He probably practiced it when he was in the county. We were UVA-wise, we were on the honor system. And somehow or another, he got the instructor's office and got his test and worked it and took hours on it, but back in the instructor's office. Anyway, he cheated himself through college. He got a job in a Northern City school, teaching business courses. He got fired the first semester because he knew nothing. And the last I heard, this is the truth, he was selling tombstones. That is a dead business, you know. Okay?
What's a tombstone?
Yeah, you know what tombstones are?
Not exactly.
All right, in your country, where they bury people?
I think we're across.
In the ground, or mausoleums, or burn them, or what? Here we put them in mausoleums. One people are being cremated. All right. So, okay, Giorgio, you're laying in the ground right here.
Okay.
Do they put any kind of marker on your grave?
Yeah.
What kind of marker?
A stone.
What do you call it?
Gravestone.
Gravestone? Well, over here we call the same thing a tombstone.
Okay.
Okay. But now, I was down in New Orleans, Louisiana, and I went out in the bayou, and they took us by a cemetery with the caskets on top of the ground. And then, of course, when they had a flood down there, those caskets were floating down the streets and everything else. So, world was different. Anyway, that's what he was doing, so if you cheat, and you cheated every course and got a degree from here, what have you got? You got a lined piece of paper. Okay. But I must say, you know, you're county majors, you're smart. You don't need to cheat. Georgia, we're on page 87, B87. No, B67. We're looking at a sub S return. Now, look at lines 1 through 6. You've got gross receipts, returns and allowances, cost of goods sold, gross profit, net gain or loss, or a 4797, and other income, and you got total income. We don't have capital gains and losses here because they're passed through to the owners. One owner, huh?
87?
No, 67, Georgia. I missed. Oh, that's on the whole book, no. Well, you're close. You're close. Let's see. Got the facts about the S corporation. Right there. Close. You're on 68. All right. Just as long as you're looking at a sub S. All right. Now, if you go down through there and look at the income, you look at compensation of officers. Now they'll get a W-2. You'll get salaries and wages, repairs and maintenance, bad debts, rents, and so on. And you get down to ordinary business income. Now, usually the bottom of this page, 22 to 27, is none. You owe no taxes. All right. Page 2 on B68. You got to tell if you're on a cash or accrual, what kind of business. You got to go down here to 5 through 13 and check these yes and no boxes. All right, usually there are no. Now you go to this K, page 69. This K is important. All right, are you on a K, Giorgio, in your old edition? Got a K? Now, ordinary income is 73,686. That's what you get from line 21. Now, if there were two people owning this S corporation, husband and wife, let's say 50-50, you split this salary. Well, you could have a 2 to 3 ratio, just like you do in a partnership. So line 1 is no problem. But now look at line 5. You report dividends here on line 5. If you got 2 partners, they split those, 500 apiece, if it's 50-50. Line 7, net short-term capital loss. They split it. Line 8, net long-term capital gain. 12.8, charitable donation, 12,000. Well, then what if this business gave 12,000 to charity? And there's 2 partners, 50-50. Each one of them gets to deduct 6,000 apiece on their 1040 Schedule AB. I'm trying to tell you, all of these lines go to individuals. You'll see them in a minute. Section investment interest expense, it had split that. Now look down at line 15A, depreciation adjustment, they'd split. Tax exempt interest income, they'd split, but they're not taxed on it. Non-deductible expenses and distribution. All right, they're going to distribute 28,000. Okay, now that K is important. But we got to take it to a K1, as I'll show you in a minute. Now look at the back on page B-70. B-7 is just your balance sheet, beginning and ending. It did have some investment income up there, 1,000. You still have to have retained earnings, and the balance sheet has to balance. Now you have a M1 reconciling income per books with income per return, almost the same as a corporation. Then you have your analysis of accumulated adjustments. You start out with balance at the beginning of the year, add income. All right, and combined, and then other adjustments. Now, the 1120S is easier than the 1120. But you've got to have a K1. Now, can you look at that K1 and your K at the same time? Can you look at B69 and B71 at the same time? Can you do that, Giorgio? All right. Can you see both pages at the same time, too? B71. Yep. All right. Now, what I want you to see here, what is up there? Wait. B72. I'm sorry. Can you see B72? B72. Okay. That at the same time. I got a loose leaf, so I can just turn mine out. Well, what is the figure you see up there on line 1, Robert? 30 what? 36,843. All right. Now go back to the K1. Now let's divide that 73,686. Somebody divide 73,686 by 2. Does that give you that number? All right. So what we did, we got two partners here. You'd make a K1 out for each partner. Now, where does this go? This 36,843 goes on a Schedule E, and you're taxed on it. Personal tax. It goes on Schedule E that's attached to your 1040. All right. Go down to line 5A on the K and divide that by 2. What do you get?
500.
All right. And go down to 7 and divide that by 2.
1,050.
All right, then divide that 4,500 by 2.
2,250.
Okay, now we're going on down. All right, line 15. What was on line 15? Divide that 1514 by 2. Does that give you 757?
Yeah, 757.
So, Giorgio, you must have the same problem. Now, divide that 18,000 by 2.
9,000.
And divide the 6,000 by 2.
3.
And then divide the 28,212 by 2. All right, that gives you 14 what?
14,106.
Right. Now, line 17. We didn't have a line 17 on the K1.
Yeah. Yeah. Oh, K1?
Yeah. Do we have a line 17 on the K?
Yes, we do. I do.
All right. What does that have on it?
On K1 or on Schedule K?
All right, it's on the K. On the back, look at page B70.
Yeah, investment income,
Yeah, what's half of 1,000?
500.
All right. Now, do you see where all those numbers come from on the K1? All right, but where do these numbers come from on A, G, Q, and R? 6,000, 75, 40,000, 44.
Other 12.
Other deductions. All right. Trying to find out where we'd get those from.
Charitable contributions.
Yeah, how much were they?
That's divided by 2 will be 6,000. Investment interest income 150 divided by 2 will be 75.
Right, that's 60 and 75.
Then
Now the 40.
40, I don't know where 40 comes from.
We got 11 and 12 filled in then. Q and R. I look at page B-66. Yeah, B-66. Now go down and look at your instructions. Here was your problem. Go down and look at line 8. How much was qualified production activity income?
80,000.
Half of that is,
40.
and allowable U.S. production activities is how much?
88.
And half of that.
44.
So you got your problem here, and you can understand the 1120 is page 1 and page 2. You can understand now the K and the K1, and hopefully you understand the balance sheet. And it's easier. Now, M1 and M2 we'll have to work on. M1 and M2 we'll have to work on. Now look at your M1 and also be looking at page 8. I mean B70 and B71 at the same time. Now your net income is 77,412. Go down to line B. Travel and entertainment expense. This is reconciling net income and taxable income. Travel and entertainment expense 4,000. Interest on loans 2,000. Those were deductions, but not for taxes. So our taxable net income was 77. If we had those back, we were not taxed on them. That would have been 83,412. Now on the right-hand side, tax exempt interest. They told you about that, 18,000. And then of course deductions included on Schedule K, line 1 through 12 and 14. Not charged against book income. Depreciation 476. We'd have to find out where they got that. We'd have to find out where they got depreciation. We can't just grab that number out of the air. I was trying to see if it was in the problem. Trying to see what their depreciation was. We'll find it later. Now, if you look at the M2, how much was your retained earnings? They call it retained earnings, or what do they call it? Accumulated earnings?
Retained earnings.
Yeah, they still call it that.
97,800.
Analysis of accumulated adjustments amounts, other adjustments, accounts, and shareholders' undistributed taxable income previously taxed. We'd have to have that information. This 86,100 was taxed last year before. And then, of course, the income this year is 73, and other additions 5510, other deductions. We'll have to find out where those come from. Municipal bonds, and then we see the balance at the end of the year, not taxable. But we'll have to look at that and see where it comes from. Then they had other adjustments. So we'll have to work on M2 also in this chapter. Okay, so that's a little bit about a sub-S. All right, let's go back and look at the sub-S. Giorgio, before you got here, we looked at page 3. That's advantages and disadvantages.
Chapter 4.
Chapter 11. Wait a minute.
Oh, we jumped to chapter 11?
Yeah, page 4. We're going to go back to chapter 2 and 3. We can never leave corporations. They just go together. All right, what's the requirements to be a sub-S? Look at page 6. You've got to be a domestic corporation. You must not be an ineligible corporation. You must have only one class of stock, like common stock. Corporations that maintain a special federal income tax status are eligible to make the S election. Corporations have elected for special Puerto Rico and U.S. positions, all right, tax credit, or that have elected the special domestic international sales corporation tax are ineligible to make the election. Well, we don't have that problem. So look at those 4 bullets. So anybody can become an S corporation. All right, now look down to general rules at the bottom of page 6. Determination of whether all outstanding stock, identical rights, distributions, liquidations, blah, blah. One class of stock, that's easy. Just issue common stock. Then agreements to purchase stock at the time of death, divorce, and so on. You can make those distributions made on the basis of the taxpayer's burden stock's interest. All right. Again, anybody can elect corporation, S corporation status. Look down to the bottom of page 7, election of. All right. The rule exempts the S corporation from the regular income tax, accumulated earnings tax, the personal holding company tax, and the corporate alternative minimum tax. There's just no tax on the S corporation. That's why I like it. Okay. And shareholders report their pro share on their own tax return. Shareholders treat most items on their own tax return. Shareholder stock bases are adjusted for shareholder taxable share of ordinary income. All right, if you make 80,000 and give out 40,000 apiece to 2 partners, there's no problem. Now, how do you make this election? Read on page 11.8, if you would, read 11.8. Read down through those 3 paragraphs and tell me how you make the election for an S corporation.
So,
All right, how did you read that paragraph, Giorgio?
so basically, in order to make an election, the corporate business needs to get a consent from all shareholders.
Right.
And then they would have to file before for the 3rd month.
Form 2553.
Yeah, 53. The 15th day of the 3rd month of the year. They have to file before that date.
All right, let's take 2018.
Yeah.
Let's say you want to be an S corporation, you and Giorgio, okay?
And Lorenzo?
You and Lorenzo. Yeah, you're partners. All right, you're doing business all year in 2018. Now, you got to file by the 15th day of March. The corporation only has 2.5 months, okay? Even an S corporation. Now, when do you have to make that election?
By the 15th day of the 3rd month.
Which is in 2019. So that'd be the day your tax return was due. So I guess you have to fill out that form and send it in before the tax return is due. All right, but look at that second paragraph. If it's a brand new corporation, the S election can be made at any time on or before the 15th day of the 3rd month of its initial tax year. Now, you'd have had to make that by 50, your tax year. Let's say it was 2018. If it's a brand new corporation, you'd have had to make that election by the 15th of March for 2018, and you don't file until the 15th of March 2019. Now that's the way I read that one. If you make the election during the first 2.5 months of the tax year, which the election is first to be effective, the corporation also must meet all the small business corporation requirements. And small business, you would probably meet those, just 2 people. Okay, so that's making the election. And again, we'll sort that out in problems. And you can terminate the election just by not refiling it. If you look at page 9, once made, the S election remains in effect until the corporation either revokes the election or terminates the election because it ceases to meet the small business requirements. So once you make that election, you're good to go unless you just up and lose it. So at the bottom of page 9, read the blue chart that will give you the elections once again. Page 10, all right, your election will be terminated if you have more than how many shareholders?
100.
All right. So for a small business, less than 100 partners is enough, isn't it? This is a partnership, this S corporation. Having an eligible shareholder own some stock, creating a second. Well, if you do a preferred stock or Class B common, you're out. Obtaining a prohibited tax status, you're out. Selecting the improper tax year, you'd be out. Failing the passive investment income test for these, you're out. All right. This corporation that I did a few years ago, their tax preparer had somehow lost the S status and they just did it in a corporation status. They had this little small business paying corporation taxes maybe on $100,000. Not a lot, but still 15% of the first $50,000 is $7,500. That was taxes they didn't have to pay. So I quickly changed it to sub-S, and they paid none of that corporate tax. And just husband and wife. So, and then they could leave the money in, but they're going to be taxed on it. See, they left that money in the corporation. They had to take it out as dividends and still be taxed on it. So sub-S was the way to go. Sub-S still gives you that corporation situation in case you're sued. Somebody comes into your place and gets hurt. All right. Mom's grocery store. If you go in and fall on spilled milk, you can sue mom. If it's a partnership, if mom and pop are partners, and you slip on that slip deal, you can sue mom and pop and take everything they got. But if you're a corporation or S corporation, you only take what's in that store's account, what's in the balance sheet. You cannot take their house and their car and their personal items. That's why you incorporate. Now, as people get sued, there was a lady, and down where I live, she would go in Long John Silver's and purposely slid on a wet spot in the floor so she could sue them. And she did. She did 2 or 3 businesses that way till they called on and didn't allow her any court claim on the 3rd case. But she was making pretty good money by lying and slipping and falling and hurting her back or something else. She did that at her job. Okay. Okay, so protect yourself is what I'm trying to say. If you're ever in a small business, protect yourself. Have any of y'all taken any of the entrepreneur courses? We got a new curriculum approved yesterday, I guess, at our meeting. Entrepreneur. And I guess we're gonna hire an instructor, maybe an entrepreneur. But, it's okay to have a whole BS degree and be an entrepreneur. If you get that, you better start your own business. And through that, you'll go through the legal forms of organization. But I think anybody in here can be an entrepreneur, but you got the accounting major to back up. All right? Use as a backup. Oh, well, you had that, but I picked up your one, me one.
I got an extra one now. I got one in, I got another.
Got enough, okay, doke.
You keep your straight bear.
I got 3 things on the page that show up for some of your classes.
What do you teach?
Not much.
Not
I'm
much.
trying to look at a sub-AS.
Oh, boy.
All right, Philip knows about sub-ASs. All right, now when you get to page 10, it starts breaking down allocation of income. Now we can allocate income on any ratio we want, just like a partner. We can go 20-60, we can go 50-50, we can go 2-1 or 2-3. So, but anyway, here under allocation of income, a terminating event occurs sometime after first day of the tax year creates a sub-S termination. Now, if your corporation, if your sub-S ever does get terminated, all right, now your corporation, the best thing to do is pay out the partners all the income in wages. And then the corporation can take a wage expense, have almost no net income, and pay very little taxes. Now, you also, if a corporation pays out dividends, they have to pay tax on that income before they gave you dividends. So a corporation pays, let's say, 20% tax on dividends, even though it exempts 80%. If they receive those dividends, but if a corporation has income of 100,000, if they give a Rosendo 50 and Giorgio 50 as wages, they have 0 net income.
They're not taxed at all.
They pay no tax. But if they give Giorgio 50,000 dividends and Lorenzo 50,000 dividends, they're taxed on $100,000. Because dividends is not a tax deduction, where wages are.
What about the can S corporation give their employees stock options?
If I were an S corporation, I would not. But if you give your employees stock options, you're taking in ownership. Then you make them a partner. An S corporation, they become a partner. I would prefer you do that. Now, if you and Lorenzo has a sub-S corporation, you own 100 shares of common and he owns 100 shares of common. Best thing to do is take in a third person and let them buy some common stock from the corporation. Or either that, or you sell in part and Lorenzo sell out part. That would also work. All right, so read about the termination. All right, look at page 13. All right, a taxable year requires that the S corporation be a permitted year defined as a tax year ended on December 31st and a fiscal year for which the corporation established a business purpose. Now, a sub-S, to save any kind of controversy, should establish a calendar year. Calendar year goes along with their owners, partners, okay? That way you don't have to prove anything, okay? Look down at the last paragraph. Last paragraph on page 13. Section 444 permits an S corporation to elect a fiscal year other than its permitted year. The fiscal year elected under 444 must have a deferred period of 3 months or less, a September 30 or later fiscal year ended for an S corporation, otherwise required to use a calendar year. If you use a calendar year, you're clear. Use a calendar year, and you have none of this controversy. All right, page 14, accounting methods election. As with a partnership, an S corporation makes accounting method election independent of accounting methods election made by its shareholders. Section 617, election related to deductions and recapture of mining exploration expenses. Section 901, election to take a credit for foreign income tax. All right, most of these elections, S corporations don't have to make because the owners have to make them. Giorgio?
Here it says, on page 15, on my book,
All right.
deductions that cannot be claimed. These deductions cannot be claimed on an S corporation.
All right, page 15 of my book, 2, deductions that cannot be claimed. The 70, 80, or 100% dividend deduction. An S corporation does not get a dividend deduction. So 0 dividend deduction, okay?
So a C corporation does get a deduction?
A C does. All right. The U.S. production activities deduction. An S corporation does not get it. A C corporation does. But the owners get the production deduction. The owners of the S corporation gets it on the individual tax return.
Oh, okay.
All right. Now, the third deduction you looked at, the same deductions disallowed to a partnership under Section 703, personal, dependent exemptions and all that, itemized deductions, they're not allowed. They'll be done on the individual tax return. Now it says charitable donations, oil and gas depletions, and carrybacks and carry forwards. You're disallowed for partnership at a sub-S. The individuals can take a lot of these deductions, like itemized and so on. Now, down on page 14 under ordinary income and loss, look at the first 2 or 3 bullets there. Net short-term capital gain and loss it's not a 1120S concern. You just have to show it on the K and the K1 because the partners split that in the ratio. Net long-term capital gains, the partners split that. The Section 1231 gains, the partners split that. And even if there was any Section 1250 gains, and even those Sections 179 expenses and charitable donations, the following items must be separately stated and passed through to the shareholder. That's why we'll practice that return. Look at page 16, first paragraph under U.S. production activities. A C corporation describes the C corporation versus of the U.S. production activity deduction is 9%. 9%. Now, a corporation might make $1 million net income, but if only 800,000 was production activities, you get 9% of 800,000. All right, now corporation gets that. Sub S does not. So let's see what it says. Individuals use a modified form of AGI instead of taxable income for this computation. The deduction, however, cannot exceed 50% of the employer's W-2 wages allocated to U.S. production activities for the year. Now, does anybody have a 1040 handy? Does anybody have a 1040 form, tax form handy? All right, look in your problems. See if you have that back on Appendix B. We were there a minute ago. Okay, I'm going all the way back on Appendix. We're on Appendix B. You see a 1040 anywhere? How about 12? Is that B12 or 12? It's there, but where else is it? Find me
It's
at
on 12.8.
12.8. All right, where is 12.8? Oh, that's chapter 12.8, right?
I guess so.
So let's go back to chapter 12.8. We'll see. Definitely says 12.8. I don't see it on 12.8. There is not a 1040 on page 12.8. So again, I'm looking for a 1040. I know it's back there in one of the chapters. Next schedule, itemized deduction, 1735. Okay, all I wanted you to look at on that 1040, nobody has a 1040? You don't have one laying around to live in? Look in your appendix, will be the best.
It's here it says on the page.
Oh, okay, okay. I looked all through those.
It says page I-28, US individual.
Okay. I-2 is individual, chapter 2, page 8. So go to chapter 2, page 8. That's it. I knew it'd be page 2, chapter 8. I looked at that as a 12, but it's I-2. There it is. We sorted that out. What y'all need? I-2, individuals, chapter 2, page 8. Now we're on there. If you take a deduction for U.S. production activities, is it under the adjustment or is it on the back somewhere? Those are passed through also. Where on there can you take them? Have you found him? Where would I take a deduction for U.S. production activities?
Line 35.
Line 35 says domestic production activity deduction, attached form 8903. So, an individual can take 9% if it's passed through from the sub-agents. So, U.S. production, okay, I take that as you're making something. Even if you're a farm, you're producing, right? If you're General Motors, you're producing. If you're Pepsi Cola Bottling Company, you're producing. That's production. I would also take house building and road building. But now, Walmart, that's not production, is it? That's pure retail. Citibank is pure services. And two of our accounting majors, I don't know who called them whatever, but they ended up on our business advisory committee meeting. One of them works down at the community bank. She works mostly in wiring and I don't know, some other receivables. And one of them is the accountant for the Center for Aging. She's an accountant for the Center for Aging. I guess it's a governmental organization. And I asked her, were they trying to find a cure for aging? I would buy some. All right. Okay, so it goes on the 1040. So now when you read about it in a sub S, you know an individual does take it back on his individual tax return. All right. That's on page 14 and 15. Now, page 16 mentions the U.S. production activity deduction, and it also mentions a special S corporation deduction. Now, taxes. Usually there are no taxes for a sub S. There may be an exception if there's passive income and losses. All right, we usually don't worry about passive income and losses unless you're a real estate or a rental type business. But we'll bypass that for the time being. All right, now the part I want you all to read real well between now and Thursday starts on page 19. Taxation of the shareholder. And continue that on through the end of the chapter, which is still quite a bit of reading. So take chapter 11, all the way through page 47 or something. All right. Now, I still want you to be working the even problems in chapter 3 and any problems I assigned in 3. So Thursday, we're going to pick up with any problem I assigned in 3, and we're going to pick up even problems in chapter 3, and we're going to look at that return. I've been having you all to put on that return for a week or two, and we're going to relate that to a sub S. So hopefully those who are not here today can attend. Please bring 1120 with you and 1120S. And I'll let you out today.